Okay, let me start with point number 1. First of all, let us learn accounting standard number 3. Am I correct or wrong? So main heading is cash flow statement, part 1. Accounting standard number 3. Hyphen cash flow statement. Write the same. Roman number 1. Accounting standard number 3, cash flow statement. Your main heading is cash flow statement, but in this chapter, first of all, you will be concentrating on the areas of accounting standard number 3. Then we will be concentrating on the problematic sections. So in that, point number 1, objective. Write in that. A. Accounting treatment hyphen presentation. Accounting treatment hyphen presentation. Presentation is a word which is applicable for financial statements. You should never forget the basics at any cost. Presentation is a word that is applicable for financial statements, and cash flow statement is a part of financial statements. Clear, everybody? Okay. And B, cash flow statement. B, cash flow statement is an additional information provided to the users to take better decision making. Next, second one, scope. Just check out once. Just check out on the screen first. As per company's accounting standard rules 2014 BC. What do you mean by BC? Business concerns divided into two types. What are those two types, Amma? Corporate entities and non-corporate entities. What do you mean by corporate entities? Companies. And what do you mean by non-corporate entities? Other than companies. And now these corporate are divided into dash and dash. Yes, SMC and non-SMC. What is SMC? What is non-SMC? Non-small and medium scale. And non-corporate are divided into 4 parts. Level 1, level 2, level 3, level 4. Whereas these two things, cash flow statement is mandatory. Whereas for these things, cash flow statement is exempted. Am I correct or wrong? Write the same. Mandatory, exempted. Cash flow statement is mandatory and exempted. Write in that. As per next, this is like point number A in scope. Point number B. As per Companies Act 2013. As per Companies Act 2013, the following companies are exempted. The following companies are exempted even though it is a non-SMC. Even though it is a non-SMC. Okay. Even though it is a non-SMC. Write in that. Write all the 4 companies. What are all the 4 companies? Small company, dormant company, 1% company, startup private company. Listen, the next slot is all about definitions. No, in future they will prepare. Start a private company, even it is defined in Companies Act 2013. Only those things will be calling it a start a private company. Apart from that, to everything it is applicable, and after that they will prepare. Initially some exemptions were given. Maybe after 2 or 3 financial years, even that has to prepare. Okay, moving on to the next thing, definitions. Hey, what is the name of our chapter? So first of all, you have to learn what is the definition of cash flow statement. So the name itself is telling cash flow statement is a statement which reconciles, very, very important, which reconciles the opening and closing balances of cash and cash equivalent through inflows and outflows with respect to activity wise. All these things we have discussed. If you want, you can check out. Cash flow statement deals with cash and cash equivalents. With the terminology that we'll call here, it is all about inflows and outflows. A new thing we are learning here is that cash flow statement is a statement. It reconciles how the opening balance had become closing balance. My dear children, it is as simple as such. Say for example, opening balance is like 1 lakh, closing balance is like 2 lakhs. Do the users having enthusiasm like how this 1 lakh had become 2 lakhs or not? Of course, how this 1 lakh had become 2 lakhs. They would like to know that. For that purpose, I am preparing a particular statement by stating the activity wise. From operating activities, we have got plus 3 lakhs. From investing activity, we have purchased minus 2 lakh. And finally, from financing activity, it is 0. We have to show somehow, like how the opening balance had become the closing balance. And my dear children, one more thing. Say if the opening balance is 1 lakh and if the closing balance is also 1 lakh, is there a need to prepare cash flow statement or not? 200% needed. Because users will be having plenty of questions in their mind. Hey, this business had run this year and it is having plenty of cash transactions, but even though opening and closing balance is one and the same, like how, why, everything it would like to know. Understood? So even though the opening balance is equal to closing balance, or if there is a difference between opening and closing balance, they would like to know why and how the opening balance had become closing balance. Understood, everybody? So tell me, what is cash flow statement? First of all, it is a statement which reconciles opening balance and closing balance of dash and dash, cash and cash equivalents through dash and dash, inflows and outflows with respect to activities. Clear? Cash flow statement is a statement which reconciles dash and dash, opening balance and closing balance of dash and dash, cash and cash equivalents through dash and dash, inflows and outflows with respect to activity wise. Clear, everybody? And now, sir, this statement reconciles opening and closing balance of dash and dash, cash and. So our next work is to learn the definitions of cash and cash equivalents. And also with respect to activity wise antunanga, what are the 3 activities we are having? Operating, investing, financing. Like tomorrow our work is all about to learn the definition number 2, cash, 3, cash equivalents, 4, operating activities, 5, investing activities, 6, financing activities. Hey, what is definition number 1? Cash flow statement. What is cash flow statement? It is a statement which reconciles opening and closing balance of dash and dash, cash and cash equivalents through dash and dash, inflows and outflows with respect to activity wise. What is the guiding standard for this one? AS3. Each and every accounting standard starts with objective. What is the objective of accounting standard number 3? Accounting treatment, presentation and It is an additional information presented to the users in order to take a better decision making. And moving on to the next thing, scope. Tell me about scope. It's applicable only to dash and dash entities. Non-SMCs and level 1 hey, you was there yesterday. So you have to respond. No, you should not confuse. If yes, you have to just go through your notebook or material. So scope, tell me, applicable only to non-SMCs and level 1 entities. As per Companies Act 2013, even though it is non-SMC, to the following 4 companies it is exempted. What are those 4 companies? Small company, dormant company, 1-person company, startup private company. Clear? So let us go through definitions. Already we have completed one definition. What is definition number 1? Cash flow statement is a statement. Okay. Next, which reconciles opening and closing balance of cash and cash equivalents through dash and dash. Inflows and outflows with respect to activity wise. Satish Mari anta fast aithe ella. ఈసారి అవ్వకపోని అప్పుడు చెప్తున్నా కదా, ఈసారి ఎట్లా లాగుతుంది తెలుసా, ఈ ఎడ్జ్లో నువ్వు ఉంటావు అనమాట. Fine. So we have to start definition number 2. Definition number 2 is cash. What is cash? My dear children, normally cash is cash is different and bank is different. But in this standard, both cash and bank includes in cash. So cash includes dash and dash. Cash and bank. Please take care. Cash includes cash and bank. Cash in the sense which might be either in the form of coins, currency, notes, etc. Also very, very important, foreign currency collection also will be including in cash. Clear everybody? Cash also includes foreign currency. Understood? And now coming to bank. Sir, there are 4 types of deposits. Am I correct or wrong? What are the 4 types of deposits? Fixed deposits, current deposits, savings deposits. Demand deposit is nothing but savings or current. All in one. Papa's fellow. If I kick you here, you'll go there. Recurring deposits. These are the 4 types of deposits. But my dear children, remember, savings and recurring are not available to artificial persons like business concerns. These are available only for general public. Whereas these 2 can be opened by any persons. Like you can open, I can open, we can open any of the 4 things. But business concern can open only these 2 things. Fixed deposit will be opened by the business concern by treating it as an investment. Current deposit will be opened by the business concern for doing day-to-day business operations. Clear everybody? So wherever we term bank, bank includes only current deposit. Cash at bank in the sense it is only current deposit. It's not any other deposit at all. Understood? Cash at bank in the sense only which deposit? Current deposit. Cash at bank. In the sense, cash in which deposit, amma? Current deposit. Understood? So now take care. We are learning definition number 2. What is definition number 2? Cash. Cash includes dash and dash. Cash in hand, cash at bank. Cash in hand might be in the form of coins, currency, notes, etc. And cash at bank in the sense, which deposit, amma? Current deposit. That is very, very important. And this also includes foreign currency. You don't forget that one. Clear everybody? That is a point of cash. Cash is over. Tell me quickly, cash includes dash and dash. Cash in hand and cash at bank. Cash at bank in the sense which deposit? Current deposit. Cash in hand in the sense coins, currencies, notes, etc. Even cash includes foreign currency. Even cash includes foreign currency. Not only reporting currency, but it also includes foreign currency. Shall I proceed further? Okay. What is the next definition number 3? Cash equivalents. Now listen very, very carefully, everybody. Listen very carefully. Cash equivalents is something not purely cash, but it can be measured in the form of cash. Almost cash features whatever are there, cash equivalence features also the same. Let me start now. Point number 1, cash equivalents will always in the form of investments. Cash equivalents will be in the form of Chapali investments for a short term period. For which period, Amma? Now there is a catch here that you need to understand. Generally short term in the sense less than or equal to 12 months. But here short term in the sense less than or equal to 3 months, or hardly you can consider 90 or 91 days only. Clear everybody? Hardly you can consider 91 days. Clear? Normally short term in the sense not 12 months, less than or equal to 12 months. Here short term in the sense less than or equal to 3 months as per accounting standard number 3, because I told you already that definitions will be learned as per standard. So as per AS3, short term in the sense less than or equal to 3 months. Clear? Cash equivalents will be in the form of investments for a short term period. What do you mean by short term? Less than or equal to 3 months. Up to this clear? Now very, very important. Listen very carefully. Should have negligible risk. What is the risk, Amma? That investments, wherever you are investing, it should have some negligible risk. Negligible is also called as insignificant. Almost no risk annattu. Clear everybody? Likewise, if you hold 100 rupees cash, is that 100 rupees cash is having risk? Of course, risk of loss is quite common. ఎవడైనా 100 రూపాయలు దుబ్బేయచ్చు, అది వేరే విషయం. అట్లా అయితే ప్రతి దానికి కూడా రిస్క్ ఉంటుంది, బట్ ఇట్ ఇస్ అ కైండ్ ఆఫ్ నెగ్లిజిబుల్ రిస్క్. నీ దగ్గర నుంచి 100 రూపీస్ పోతున్నాయంటే నువ్వెంత కేర్లెస్గా ఉంటే పోతాయి. దాట్ కైండ్ ఆఫ్ రిస్క్ ఇస్ డిఫరెంట్. ఓకే, బట్ సే ఫర్ ఎగ్జాంపుల్ యూర్ ఇన్వెస్టింగ్ ఇన్ ఈక్విటీ షేర్ ఫర్ ఎ పీరియడ్ ఆఫ్ లెస్ దెన్ ఆర్ ఈక్వల్ టు 3 months. Hey, listen carefully. Investing in equity shares for a period less than or equal to 3 months. Answer me. Can it be called as a cash equivalent or not? Why? It is more risky. It is very riskier. Reason being, it will be traded in the market. Even we being teachers suggest the students that don't invest in stock market at this stage at any cost. After completing your CA final, after gaining very good knowledge, then you can invest. Now, don't invest. Don't invest. Anyways, so your investments should have negligible risk. Your investments should have negligible risk. And very, very important thing, should be liquidated easily. What do you mean by liquidated, sir? Convertible into cash. Clear everybody? So your investments should be for a period of less than or equal to 3 months and should be liquidated. That is like easily convertible into cash, and it should not have any risk. It should not fluctuate in the market. If you invest for 100 rupees, almost more or less you have to get 100. Like 99, 101 is okay, but investing 100 and getting 80 is always riskier. That things will not be considered as cash equivalents. Understood? If you invest for 1 lakh rupees, more or less 1 lakh is okay. Like 99,500, 1 lakh 10,000, 1 lakh 500 or 1 lakh 1,000, those are all okay. But high risk here. If you invest 1 lakh getting only 80,000. If you invest 1 lakh, you may get 1 lakh 55,000. All those things will never be considered as cash equivalents. Understood everybody? Pakka? Just answer me. What is this called? Investment in debentures for a period less than or equal to 3 months. Is it a cash equivalent or not? Yes. What about you people? Oh, thinking. Think and answer. Investment in debentures for a period less than or equal to 3 months. I'll give some extension also. Investment in debenture or preference share. Same answer. For a period less than or equal to 3 months. Is it a cash equivalent or not? Quickly. Yes. No idea is not possible at all. You should get an idea. Think and answer. Think about whether is it liquidated easily or negligible risk, and just give the answer. Yes. 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 It's a cash equivalent. Reason is very simple that generally, my dear children, equity share will be traded in the market, but not preference share, but not debenture. If at all the debenture is getting traded in the market, again we will tell it is a riskier thing. But deemed assumptions antam kada. So investment in equity share, commonly equity share will be traded in the market, risk is high. Investment in debenture and preference shares generally will not be traded in the market, and hence they are having some sort of negligible risk. Now investment in debenture which is actively traded in the market. Answer. Question adiga. Investment in a debenture which is actively traded in the market. No, it's not a cash equivalent, because any instrument which is getting actively traded in the market is always having high risk. Pakka? That's the end of cash equivalents. And so cash equivalents will be in the form of investments for a period less than or equal to that is like 3 months, and should be easily liquidated, that is convertible into cash. And what kind of risk it should have? Negligible risk or insignificant amount of risk. Pakka. So take more care. That's the end of cash equivalents. And actively traded securities are always having high risk, and hence they cannot be considered as cash equivalents. Pakka. Now moving on to the next thing. Is it possible to invest in fixed deposit for a period less than or equal to 3 months? Come on, fixed deposit minimum 1 year. So less than or equal to 3 months is not at all possible. Now next question. Generally what are considered as cash equivalents, sir? As simple as such, all the money market securities. Investments in money market securities. Hope you know the difference between capital market securities and money market securities. Yes or no? ఒక క్వశ్చన్ అడిగినప్పుడు ఆన్సర్ వెంటనే చెప్పాలి. No. Okay. Capital market securities are nothing but shares, debentures, bonds, etc. Money market securities is regulated by central government. Money market is regulated by central government and RBI. Likewise, you might have heard these words: commercial papers, certificate of deposits, 91 days T-bills or treasury bills. All these are regulated by central government under the purview of RBI, and these are always less risky, and the maximum period is like 12 months. If you are investing within a period of 3 months, then all these things will be considered as cash equivalents. Understood? That's the end of definition, cash equivalents. Clear? డౌట్ వచ్చినా అడగండి. Anyways, hope you have got the difference between cash and cash equivalents now. Tell me, cash includes dash and dash. Cash in hand and cash at bank. And cash at bank in the sense it includes only current deposits. Cash in hand in the sense coins, etc. It also includes foreign currency. And coming to the next one, cash equivalents. Tell me, cash equivalents is in the form of investments for a period less than or equal to 3 months. That is like short term. Next, what is the ability of liquidity? Easily liquidated or not? Easily liquidated. And how the risk? Insignificant or negligible risk. Pakka. Generally investments in dash are considered as cash equivalents. Money market securities are considered as cash equivalents. Understood? Now moving on to the next thing. Definition number 4, 5, 6. We have to speak about activities. What are those activities? Operating activities, investing activities, financing activities. So what are operating activities? Already we have seen in a very smaller way. These are relating to goods and these are relating to ordinary course of business. Investing activities are relating to fixed assets or investments, and financing activities are relating to capital. Capital might be either owned capital or even borrowed capital. Understood? Now let me start with definition area. Operating activity, those items which are directly related to principal revenue generating activities. Clear everybody? Those activities which are directly related to principal revenue generating activities. I guess you're a new person, but this is not that tougher concept. Okay? You have to respond. That's it. Operating activities or those items which are directly related to principal revenue generating activities. Sir, what do you mean by principal revenue generating activities? Adi chala pedda peru. Principal revenue generating activities. That is nothing but sales. Principal is nothing but main. Revenue from main activity, which is nothing but revenue from operations. So indirectly it is nothing but sales. So those activities which are directly connected to sales, everything will be called as operating activities. Understood everybody? Those activities which are directly related to principal revenue generating activities. Those items which are connected for generation of sales, all those items are called as operating activities. Understood? Pakka? Fine. So just I'll ask you some questions, you answer me, okay? What is sales? Which activity? Operating activity. Your intention is to get sale, and that sale is nothing but operating activity. Understood? Purchases. Because without purchasing goods you cannot sell. And all the wages paid, carriage inward, etc. and etc. Why these are operating? Without wages and without this carriage inward, you cannot purchase a good. Clear? If you are not purchasing a good, you cannot sell it. So it is directly related. And all the selling and distribution expenses. Chapali, advertisement, stationery, printing, bad debts. Bad debts. Tell me the journal entry for bad debts. Bad debts to? Bad debts to debtors. Hey, correct or wrong? Salary paid, what is a journal entry? Salary to sales, what is a journal entry? Okay. Purchases, what is a journal entry? Super. Advertisement, what is a journal entry? Okay. What is the entry for bad debts? Bad debts to? Check out the difference. In transaction number 1, 2, 3 and 4, there's a concept of cash. But in transaction number 5, that is bad debt, there is no inflow or outflow of cash. If there is no inflow and outflow of cash, how could you classify it as a activity, that too under cash flow statement? Hey, what is AS3? In the sense, cash flow should be there. In bad debts, where is cash flow? And hence bad debt is not an activity at all. Not just operating, it is not at all an activity. Understood? Credit sales. Not an activity because it is not connected with cash. Credit purchases. Credit customers repaid cash. That's an activity. We could credit customers or repaying cash for us. Which activity? Operating activity, because debtors repaying cash is quite common. We are paying to creditors. Operating activities. Hope you have understood. Those activities which are directly related to principal revenue generating activities. Understood everybody? Those item or those element, those transactions which are directly connected for generation of sales, then every element we will be calling it as operating activity. Shall I proceed further? Definition number 5. What is definition number 5? Investing activities. Listen very, very carefully. Those activities which are connected to acquisition and disposal. What is the terminology? Acquisition and disposal of fixed assets and investments. Those items which are connected to Chepali, acquisition and disposal of fixed assets and investments. Understood everybody? This we will be calling as investing activity. So what do you mean by this one? What do you mean by acquisition, my dear children? Purchase. What do you mean by disposal? So these are stunt words are nothing but acquisition and disposal. Clear? Like purchase and sale, which is nothing but acquisition and disposal of dash and dash. Fixed assets and investments. Understood everybody? Just answer my questions, okay? Something like machinery purchased. Which activity? Investing activity. Hey, not only those activities which are relating to acquisition and disposal, okay, also income generated from those investments is also investing activity. Be careful, okay? Anyways, machinery purchase, which activity? Super. And wages paid on installation of plant and machinery. Investing or operating? Investing. Because wages paid, general wages paid or? General wages paid. Operating. But wages paid for installation of machinery is investing activity. Understood? And let me proceed. Company deposited some amount into fixed deposit. Company deposits some amount into fixed deposit. That's investing activity. Because fixed deposit will be treated as an investment. Current deposit will be treated for day-to-day operations. Clear? And also I told you that fixed deposit generally for 12 months. So it's obviously which activity? Investing activity. And interest received. Interest received. Investing or operating? Investing activity. Because you will receive interest only on the investments. Did you understand? Investment in equity shares. Investment in equity shares. Which activity? Investing activity. What's your doubt? I did not get you. You told something. Is it clear? Investment in equity shares of some other company is nothing but investing activity. Investment in debentures of some other company. Investing activities. Dividend received. Because only when you are investing in some other company's equity shares, you are able to receive the dividend. Clear? And commission received. That's an operating. Because it is relating to goods. Understood? Commission paid. Operating activities because it is relating to goods again. Rent paid. Operating. Rent received. Investing. Because you can receive rent only when you have invested in land and buildings. Understood everybody? Purchase of patents. Investing. Because just check out fixed assets and investments. I never told you that fixed assets includes only tangible. It also includes both tangible and intangible. Take care. Understood? Purchase of goodwill. Investing. Sale of trademarks. Investing. TDS deducted on interest earned. TDS deducted deducted on interest earned. Hope you know what is TDS first of all. What is TDS? Tax deducted at source. Listen very, very carefully. First I'll explain you the reality, then I'll tell you what it will happen. Say for example, you are earning 100 rupees interest earned. What is this activity? Investing activity. Now the payer, whoever is there, he is deducting 10 rupees towards TDS. And he is giving you only rupees 90. So what is the entry I'll be writing, sir? Cash or bank account debtor, I got only rupees 90 to interest income. But my interest income is rupees 100. So then what about this 10 rupees, sir? TDS. And since it is a debit side, I will be calling it as TDS receivable. Because once if the year completes, I will be filing the tax return. And once I have filed the tax return, then I will be observing the tax amount. Clear everybody? And at the end of the year, my income tax will be getting set off against this TDS receivable. This all we will learn in preparation of financial statements. As of now, it is very simple. If debit side is there, it will be TDS receivable. If credit side is there, it is TDS payable. You remember only these things. More than this, we will be learning in the chapter of POFs, preparation of financial statements. Now, you think with common sense, okay? How much is your income? 100. How much you have received? 90. How much is not at all connected to cash? 10. This 10 is not at all connected to cash. Let me break and write two entries for this one. Cash or bank account debtor to interest income 90. TDS receivable 10 to interest income 10. So strictly speaking, TDS is not at all an activity. Clear everybody? But accounting standard number 3 is telling treat it as an investing activity. Treat it as an investing activity. But while posting cash flows from investing activities, interest earned 100 minus 10, only 90. Hope you have got the logic. Strictly speaking, TDS received on interest is not at all an activity. But AS3 is asking you to classify it as an investing activity since it is directly connected to investing. Correct or wrong? But while writing, don't write 100 as your income received. Your income received is only 90. So after deducting 10 rupees, which is nothing but TDS, you put the outer column which comes to rupees 90. Perfect. Any doubts? Sure, kada? Okay, let me proceed further. Likewise, insurance premium paid. Insurance premium paid. Operating. Insurance premium paid. That's operating because he did not tell you the purpose. Now listen carefully. Insurance premium paid for fixed asset. That is connected to fixed asset and hence it's an investing activity. Clear? Claim received for loss of stock. I don't want that at all. Operating. Claim received for loss of stock. Claim received for loss of fixed asset. Investing. Hope you might have got the essence of the transactions now. So that's the end of definition number 5. And let me move on to definition number 6. What is that activity? Those items or those activities which causes changes in composition of capital funds. Hey, I'm telling you the definitions, okay? Normally speaking, those activities relating to capital, owned capital or borrowed capital. But I have to tell you in definition wise now. So financing activities or those activities which causes changes in the composition of capital funds. Remember, my dear children, even though it is crash, there will be no compromise in teaching the concept at any cost. 1% difference will not be there for regular batch and crash batch in teaching the concept. Problems no difference chupistam. Because if it is repetitive or basic problem, we will not teach that because we are having lesser time. But concept, no compromise. Not even single percentage compromise in concept teaching. Anyways, coming back, changes in the composition of capital funds. Clear everybody? So what do you mean by capital funds? It might be either owned capital or it might be either loaned capital or borrowed capital. You are doing one activity or you are having a transaction because of which there will be change in the composition of capital. Either whole capital might have changed or it is affecting the capital funds. Understood? Share capital issued. Financing activity, because with issue of share capital, capital will increase. Clear? And next, redemption of preference shares. Financing, redemption of debentures, issue of bonds for acquisition of fixed asset. Issue of bonds for acquisition of fixed asset. Investing or financing? Okay, let us write the entry. Issuing of, in the sense, 2 bonds. Am I correct or wrong? For acquisition of fixed assets. That is the answer. Because what is the entry you're writing for that? Fixed assets account debtor to bonds account. There is no inflow and outflow of cash and hence it's not at all an activity. Take care. Clear everybody? Depreciation. Not an activity because the entry depreciation account debtor to cash or bank account. Understood everybody? Outstanding salary paid. Outstanding salary paid. So it's an operating activity. Okay. Outstanding salary is not an activity because salary account or to outstanding salary account. Wantedly teachers and examination will confuse you and you should not confuse for that thing. Just give it just a second of time and if you think you'll get answer for sure. And let me move on to some things like interest paid. Interest paid. Financing activity because you'll be paying interest on the loans taken. Interest received. Investing activity. Dividend paid. Financing activity. Dividend received. Because dividend will be paid on shares which are issued. Dividend will be received on the shares which are invested. Commission paid. Operating. Commission received. Operating. Rent received. Rent paid. Operating. Hope you might have got that thin line of difference. Rent paid is done for the purpose of doing the business. It is nowhere connected with the financing capital at all. Understood? Drawings. Drawings. That's financing, which causes the changes in composition of capital funds. So with drawings, overall capital will decrease. Clear everybody? Interest on drawings. Interest on drawings, not at all an activity. Because interest on drawings journal entry will be interest on drawings account debtor to capital account. Clear? So interest on drawings is not at all an activity. Pakka? Donation paid. Why and how? So there's one more category like donation paid. Is it relating to goods? No. Is it relating to fixed assets and investments? No. Is it relating to capitals? No. So there's another category called residuary. All the residuary things which are not at all relating with any other things, it will become operating. Understood? If you don't know the activity, it will become operating. Hey, my intention is not if you don't know the activity, it will become operating. Clear? If we cannot classify the activity, then it will become a residuary head and it will become operating. Lottery tickets purchased. Operating. Lottery won. Lottery won. Operating. Because if you have won a lottery, it is not an investment. It is not relating to capital. It is not relating to good. It comes under residuary heads and it will become operating. Capital gains tax paid. capital gains tax paid. Think a bit. Think a bit, Antuna. Okay. Capital gains tax. Okay. How many of it is not an activity? Operating. Whatever, that is all not needed to me at all. I'm not speaking about the presentation aspects. Still activity classification. Operating. Not operating, no idea na. Okay. Operating. Okay. Then what is the answer? నిమిషానికి ఒకటి చెప్పు నువ్వు. No, and the 3 activities, pick one. Okay, it's an investing activity because capital gains tax in the sense sale of fixed assets, profit on sale of fixed assets. Why you will pay capital gains tax? Just think for a while. Profit on sale of fixed assets, you will be paying the tax. And since you are paying the tax on profit on sale of fixed assets, it's an investing activity, as simple as such. Clear? Normal tax paid. That's an operating because you will be paying tax on the profits. Profits are generated from sales. Understood? And TDS on interest paid. Financing. Because interest paid is which activity? Financing. Now you have to pay. Did you understand? You have to pay the TDS on behalf of some other person which had cut towards interest. Likewise, I have to pay on a whole of rupees 90. Sorry. I have to pay on a whole of rupees 100, but I am paying only 90. But my interest expense is 100. TDS payable will become 10. Now you have to pay this to government at any cost. So TDS payable account or to cash or bank account 10. So you are paying this and it is exactly for the purpose of interest paid, and hence it is nothing but financing activity. It is not as similar to your TDS receivable. Their TDS receivable you are not at all receiving in the form of cash, but here you have to pay. Otherwise you will be punished. That is what your tax act is telling. Understood, everybody? Anyways, those are the 3 activities. What are the 3 activities that you have learnt? Operating, investing, financing. First tell me the definition route, okay? Definition route. Operating activities, those items which are directly connected to principal, revenue, generating activities. Investing activities, those items which are connected to dash and dash. Acquisition and disposal of fixed assets and investments. And coming to financing activities, those activities which causes the changes in the composition of capital funds. Now to identify in a simplest way, these are relating to goods and ordinary course of business. These are relating to fixed assets and investments. These are relating to capital. Capital might be either owned or borrowed. Understood? That's what your activities are about. Perfect. Okay. Tomorrow's class is very important. Don't miss, okay? I'm not stopping the class. Tomorrow's class is very, very important because I'll be giving you plenty of items to classify the activities. Okay. Now start writing. Definitions number 1. Definitions. First one. Cash flow statement. Write in that. Cash flow statement is a statement which reconciles the opening and closing balances of. Sir, I'll be dictating a bit faster. You have to write faster. Only then you will be able to write full marks in your examination. That is very, very important. Cash flow statement is a statement which reconciles the opening and closing balances of cash and cash equivalents with inflows and outflows through activity wise. Within brackets, what are the three activities we are having? Operating, investing, and financing. Through activity wise, just within brackets you can write operating, investing, and financing. Next, definition number 2. Just get ready for definition number 2. What is definition number 2? Cash. Write the same. Definition number 2, cash. Just make it into 2 parts. Includes. Cash includes left side and right side. Left side, cash in hand, and right side, cash at bank. Put a down arrow mark to left side, that is cash in hand, and right includes currency, notes, coins, etc. Includes currency, notes, coins, etc. Now come to the right side, cash at bank, underline and put a down arrow mark. Left side includes currency, coins, notes, etc. Come to the right side, cash at bank you have written, underline, put a down arrow mark and write there. What is that? Yes, amount with current deposit count. Amount with current deposit account. Amount with current deposit account. And the next one, note, which is applicable normally not at left side or the right side. Note. Cash also includes foreign currency. In the sense, it might be either in hand or it might be either at bank. Clear, everybody? Cash also includes FC, foreign currency. Definition number 3. What is definition number 3? Cash equivalents. Cash equivalents. Yes, tell me what is cash equivalents? Yes, write the same. In the form of investments, cash equivalents. Point number 1, I mean to tell, like, cash equivalents, keep an hyphen and write in the form of investments. In the next line, for a short-term period within brackets, i.e. that is less than or equal to 3 months. That is very, very important. In the next point, can be easily convertible into cash. Can be easily convertible into cash within brackets liquidity. With a negligible risk, లేదా insignificant amount of risk. With a negligible risk, లేదా you can also write insignificant amount of risk. With a negligible risk or insignificant amount of risk. Okay. Note. Investment in actively traded market securities. Investment in actively traded market securities. Or having high risk. Or having high risk. What do you mean by or having high risk? No, I mean to tell whether is it a cash equivalent or not. No, actively traded market securities are not at all cash equivalents. That is what my intention. Or having high risk. Next point. Investment in debentures and preference shares. Point number 2. Investment in debentures and preference shares are generally or generally not traded in the market, or generally not traded in the market, within brackets, i.e. that is negligible risk. Negligible risk. So if the period of investment is less than or equal to 3 months, we can tell that they are cash equivalents. Ardhamainda? If the investment period is less than or equal to 3 months, we can tell it is cash equivalent. But if the investment period is more than 12 months, it is not a cash equivalent. That is the reason I am not making you to write whether it is cash equivalent or not. I am telling you the nature. Debenture, generally not actively traded in the market. Clear? Next one. Investment in equity shares. Point number 3. Investment in equity shares are always risky, high risk, or always having high risk. Investment in equity shares. Investment and rasar kada. Investment in equity shares is always having high risk. Whether or not it is actively traded in the market. Because equity share, in the sense you are the owner of the company, so you are always having that risk. Clear? Okay. Or always having high risk. Point number 4. Generally, investment in money market securities. Investment in money market securities or marketable securities. Or marketable securities for a period less than or equal to 3 months. For a period less than or equal to 3 months is considered as Chapali cash equivalents. Cash equivalents, within brackets, investments like, within brackets, investments like Chapandi, treasury bills, commercial papers, certificate of deposits, etc. What did you tell? I did not understand. No, that is like capital market securities. Okay. You can write any 2: commercial paper, certificate of deposits, treasury bills, etc. Next, definition number 4, 3. What is over cash flow statement? Okay. 4, 5, 6. Operating activities, investing activities, financing activities. Right, like this, okay? You'll be having side by side. If you're not having enough space, you can write even one by one, nothing great. Write in operating activities. Those items which are connected to, principal revenue generating activities. Those items which are connected to principal revenue generating activities. Principal revenue generating activities. I'll be giving you all the examples, so here no need to write the examples at all. Principal revenue generating activities. And write at investing activities. Okay. Shall I start? Investing. Those items which are connected to those items which are connected to acquisition and disposal of fixed assets and investments. Acquisition and disposal of fixed assets and investments. అమ్మా అందరికీ అర్థమవుతుంది కదా, ప్రాబ్లమ్స్ లాంటివి ఏం లేవు కదా. Fine, if you feel any sort of understanding difference, communication difference or what not, you can just directly tell me. Let us go together by rectifying everything, okay? And also any problems, say if at all we are having 7 or 8 problems, I'll be teaching you 7 problems or I'll be teaching you 6 problems. The last 1 or 2 problems you have to do. I'll be guiding you how to do in the class itself. You have to do it, okay? Anyways, moving on to the last and final one, financing activity. Write in that those items which causes the changes, those items which causes the changes in the composition of capital funds. Those items which causes the changes in the composition of capital funds. That's it. Now next, note. So these notes will be highly enough for you for doing your problematics, or yeah, to the extent of theory, this notes will be highly enough for you. Next note. Some items cannot be classified under any of the above activities. Those items which cannot be classified under any of the above activities, i.e. that is not satisfying any of the above definitions. Not satisfying any of the above definitions. Not satisfying any of the above definitions. Next, such items are considered as residuary. Such items are considered as residuary. To what extent? I guess you have done all the definitions, and also have done by writing the note residuary items. Okay. Some examples, not examples, yeah, something like that. Classification, that is what you can write, classification of items. You can write along with me. Interest paid, interest received, dividend paid, dividend received, rent paid, rent received, commission paid, commission received. Interest paid, financing. Next, investing, financing, investing. Take care, it's operating now. Investing, operating. That's it. That's the first one. L and A. Loans and advances, okay. కొన్ని ఎక్కువ ఉన్నాయి, but just take care. Just wait. Loans and advances given to employees. Just start telling me the activities. Okay. Loans and advances given to creditors. Answer. Operating. Yes, correct. Because employees or day-to-day activities, likewise prepaid expense. It's quite common to give some advance to employees. It's quite common to give advance to our creditors, and hence loans and advances are quite common. Loans given to subsidiary companies. Financing. Loans given to others. Financing. Loans taken and interest paid. Any other person. You can. Loans taken and interest paid. Answer me first. Okay. Next, loans taken for purchase of asset. Okay. Loans taken for working capital. Okay. Next, grant receipt for purchase of asset. Investing. Grant receipt for providing facilities to employees. Okay. Grants received. Operating. Okay, finally, 3 correct answers. Ante. 1 and 2 are correct. A and B are correct. I don't want to touch A and B at all. These 2 are correct answers. From C, D, E, F, G, H, I, J. Muttam 8. Out of 8, 3 correct answers. You can change the answers, you can think the answers, and you have to tell the answers. Don't confuse with the word loan given and loan taken. As simple as such, if you are taking a loan, your borrowed capital will change. But if you are giving a loan to somebody else, how it will affect your capital? It is obviously your asset. Loan given to subsidiary company. Understood? So it is an investing activity. And loan given to others. We don't know to whom we have given the loan. And hence, assume even you have given loan to others to earn interest from that. So again, it will become an investing activity. Clear? Now, loans taken and interest paid. Of course, financing activity. This is what you have told the correct answer. Loans taken for purchase of asset. Sir, did I tell you to check the purpose for what you have taken the loan? నేను మీకు నిన్న ఏమైనా చెప్పేటప్పుడు did I tell you Like, check out for what you have taken the loan. No, I did not tell it. You've just taken a loan. అలా అయితే ఇంకో ఫ్యాక్ట్ మాట్లాడుకుందామా? మీ లాజిక్ ప్రకారం లోన్ ఎప్పుడు కూడా ఫైనాన్సింగ్ అవ్వదు. As per your logic, loan will never become a financing. Why? Because loan will be always taken for a purpose. If it is taken for investing purpose, investing activity. If it is taken for operating purpose, operating activity. Then when it will become financing? It's a wrong answer. Loan will be always taken only when you need something. Correct or wrong? That purpose is not needed for you. Loan taken is always a financing activity, remember. You mean to tell loan taken even for purchase of asset is also financing activity, sir? Yes, 200%. Because you take a loan taken, financing activity. Now you purchase the asset, purchase of asset. This is investing activity. Understood? If you take a loan of 10 lakhs, you have got 10 lakhs plus 10 lakhs, financing activity. With that 10 lakhs, you have purchased an asset minus 10 lakhs. That is an investing activity. Understood? So this is also wrong answer that was told by you. And loan taken for working capital. Answer. Financing. Just now I told you, you should not check the purpose. Grant received for purchase of asset. That is an investing activity. Why, sir? Do you know that loan and grant are similar in nature? Loan and grant are similar in nature. The only difference is that loan will have to be repaid, grant will not be repaid. Grant is like a gift. Loan is like a loan, like you have to repay. Grant is like a gift, no need to repay. So, as per the Expert Advisory Committee of ICAI, it had very clearly clarified that grant has to be checked out for what purpose it has taken. Clear? Grant has taken for the purpose of purchasing an asset and hence it is financing activity. Understood? Investing activity, it is not a financing. But loan taken for purchase of an asset, financing, because loan has to be repaid. Don't check for the purpose. Grant will not be repaid, so you have to check for the purpose. It was like this clarified by the Expert Advisory Committee of ICAI. Clear? And next, grant received for providing facilities to employees. This is perfectly operating because just now I told you grant has to be checked out for the purpose. Loan will never be checked out for the purpose. And grants received, no specific purpose is given. Now you have to consider this as financing activity because grant and loan are similar. Understood? So grant received has to be considered as financing activity. Also there is another version that it might be considered as operating activities under residuary head. So now what is correct? There is no clarity on point number J till now. It is something like controversial. This is controversial. And remaining all we are having absolute clear. Clear everybody? Then what is correct answer, sir? Financing or operating? I recommend you to write both things if asked in the examination. So if it is, since no specificity is mentioned, and since grant is similar to loan, it can be treated as financing activity. But as per the other version, under residuary heads, it can also be treated as operating activity. I recommend you to write like this, because at the end of the day, we don't know what would be the suggested answer that will be given by ICAI, because this was not clarified in that notice. Expert Advisory Committee of ICAI had given a notice that grant has to be checked out with the purpose, loan shall not be checked out with the purpose. Because grant will not be repaid, loan has to be repaid. This is what the notice is containing about. Understood? That's it, and you can just copy. And మీరు చేసిన మిస్టేక్స్ మీకు అర్థమైంది కదమ్మా? Those are not actually mistakes, overlook. So be careful. Done. Point number 3. Let me go with items related to tax. Already we have discussed yesterday. PFT I'm writing, okay, which is provision for tax. Be careful while answering this time. You should not do the mistake. That's it. Okay, ready? Answer me now. Provision for tax. Not an activity. Why? Because there is no cash flow, so it is not an activity. This time hoping that you'll tell almost all the correct answers. Provision for tax paid. So what is that activity? Provision for tax paid. It's an operating activity because I clearly told it is paid. Paid in the sense payment is done, outflow is there. So it is obviously an activity. Concentrate. Advance tax paid. Yes, again operating activity. Different forms of tax, that's it. TDS on salaries. Operating. Because salary is an operating activity. On that, if you have deducted tax, this is an operating. TDS on interest received. Investing activity. Already I told you yesterday, even though strictly it is not an activity, as per AS3, it is classified as investing activity only. You have to write the answer like that itself. But it is non-cash. Am I correct or wrong? This is written for our clarity. As per AS3, it is investing. But within brackets, we are writing non-cash to have better clarity for us. Next, TDS on interest paid. Financing, because interest paid is financing. Income tax refund, operating. Sir, income tax paid is operating. So if you paid extra, he will be giving you some refund. That is obviously operating. Next, capital gains tax paid. That's an investing. Clear? That's it with tax. What are all these things? Non-cash, because there is no flow of cash. Take care. Non-cash items and hence not an activity. And your heading is nothing but items relating to non-cash. Be careful with point number 5. I'm ready, and if you're ready, just start with the answers. For a marketable securities purchase, not an activity. I don't know. Your friends told, I have written that. Investing activity. One correct answer. Okay. Sir, did you remember the definition of cash flow statement? You tell me the definition of cash flow statement. A reconciliation between opening and closing balances of cash and మళ్ళీ చెప్పరా cash and cash equivalents. Cash also includes cash and bank. Correct or wrong? మీకు ఏమైనా అర్థమైతే మళ్ళీ ఒకసారి యాక్టివిటీస్ చెప్పండి, I'll write it. It's an investing activity 200%. Sir, you have to check out why there is a difference between opening balance and closing balance of cash. Am I correct or wrong? So if cash is deposited into bank, it is something that cash is also cash, bank is also cash. So it's not at all an activity. Did you understand? Even if cash is withdrawn from the bank, it is something like from your shirt pocket your money is going into some other pant pocket or something like that. The form of cash is getting changed. It's not an activity. See, operating activity in the sense you have to utilize for your operations or you have to get the cash from operations. Investing in the sense you just have to utilize the cash for investments, that is assets or investments, or you have to get cash from that. Financing, something like capital. So if cash is deposited into bank, for what is that? Cash is also cash, bank is also cash. Cash is withdrawn from the bank. Let it be. Bank is also cash, cash is also cash. So these two things, not activity. Within brackets, form of cash changes. Likewise, form of cash is getting changed. And what about D? That's financing because it is drawings. And what about E? Again same, not an activity, same. Since form of cash changes. TXN is a short form which is used for transactions in banking language. So transactions between cash, bank and cash equivalents. If I have written the heading first itself, you will get an alarming point and you may tell the answer. Anyways, point number E, marketable securities is cash equivalent. If you're purchasing cash equivalent, that is also normal cash kada. There you have written in your notebook that marketable securities ought to be treated as cash equivalents only. Likewise, if you have purchased money marketable security, money market securities, it's not an investing activity. If you are purchasing certificate of deposits, it's not an investing activity because it is also another form of cash. Okay. Chepu. Marketable securities means it's money market securities as per the language of AS3. Marketable securities means money market securities as per AS3 antunna kada. Money market securities is something like it is not having risk here. Notes or రాయించ చూడు. You've written somewhere marketable securities. Cash equivalent దగ్గర రాస్తారే. Yes. Generally investments in money market securities are called as marketable securities. So here marketable securities doesn't mean those securities which are traded in the market. You are speaking about those securities which are trading in the stock market. But here marketable securities generally means that it is money market securities. That is AS3 language. Okay. Done with point number 5. So point number 6. Transactions or items relating to insurance. Insurance premium paid. ESI. Hope you know ESI. Employee state insurance, which is for the purpose of employee. INS I'm writing, which is nothing but insurance, okay? Insurance premium paid, ESI paid, premium paid on securing stock, insurance on cash in transit, insurance on goods in transit, claim received on loss of stock, claim received on fixed assets. Yes, even there is insurance on cash in transit. Likewise, how you're having insurance on goods in transit, in the same way you're having insurance on cash in transit. Best example, did you ever see on the road something like ATM machines like Edgip or something, they'll be writing on those ATM vans untai kada. For loading cash into ATMs, some sort of vans will be on the roads. For all those things, there will be cash, that is called as cash in transit insurance. On that, they will be taking insurance. Okay, start with the answers. Operating activity, since no information is there, because it is exclusively for employees, because it is for the purpose of stock, it is an activity, it is an operating activity. Did you get my point? So please take care. Insurance on cash in transit, in the sense premium paid on cash in transit ani ardham. Okay. Premium paid on cash in transit is an activity, it's an operating activity. Premium paid on goods in transit, operating. So take care. Wantedly, I have changed the language. Insurance on goods in transit, insurance on cash in transit, in the sense you're taking insurance on cash in transit. You're taking insurance on goods in transit, for which you have to pay the premium. Clear. Next, claim received on loss of stock, operating. Claim received on loss of fixed assets, investing. Premium paid on fixed assets, investing. Okay, that all you can write. These are not exhaustive list, illustrative list ante. Activity, claim in transit, in the sense it is outstanding claim kada. Insurance and cash in transit and claim in transit. Listen very carefully, okay? If not, you will be understanding this part after the completion of ACE 11. Hope you're having little idea on ACE 11, like exchange differences, how to manage the exchange differences. So listen very, very carefully, okay? Yeah, a company holding, listen very carefully, okay? You can write, after that I'll explain. $1,000, year starting, exchange rate is equal to rupees 62, year ending, exchange rate ఎంత కావాలి? You tell me, I'll write one figure. Okay, 73. That is first one. Okay, next B. A company sold to a foreign debtor. Foreign customer, not a debtor. For rupees $1,000, for rupees dollar kaadu, for $1,000 and exchange rate on that date is equal to rupees 70, and during the year received $800 when exchange rate is equal to rupees 68 and year ending rate is equal to rupees 69. I will not tell anything. You do whatever you have got. One thing I'm pretty sure that since here customer is there and here sale is there, it is obviously operating activity. I want amounts. How you will deal that? There's no question, there's nothing. How you will deal these two things in cash flow statement? That is a question. How to deal or present in cash flow statement? This is the question. Take time, you do, and tell the answer. So we are selling $1,000 to one person. At that time, the rate is rupees 70. During the year, received 800. When the exchange rate is 68. Year end, the rate is 69. Take care, out of $1,000, you have received only $800. Still, there is $200 pending at the end of the year, where it has to be valued at 69. Initially 70. At the time of receipt, 68. This is all the question. Fine, for the first one, opening balance will be 1000 into 62. Closing balance will be 1000 into 73. Did you get my point? Opening balance will become 1000 into 62. Hey, listen first, you copycats. 62,000. Okay. Now, closing balance. How much closing balance will be? $1,000 into 73, which comes to 73,000. Am I correct or wrong? Strictly speaking, there is no cash flow between 62 and 73. Will you admit or not? Yes or no? It is not a cash flow. Sir, initially the rate is 62. Year ending the rate is 73. From 62 to 73, in the sense there is a difference of 11,000. Huh? So that 11,000, what is that 11,000 will be? It is not at all your cash flow. That is point number one that you need to understand. Understood? So add foreign exchange gain hyphen. This will be transferred to P&L account, which comes to 1000 multiplied by 73 minus 62, which is 11,000. Understood? That's it. In cash flow statement, you're going to present the same in this way. Clear? Point number one is this 11,000 cash flows or not a cash flows? Yes, sir. Is it cash flows or not a cash flows? Not a cash flows. Be very, very careful. This one is not a cash flow. Hello, mister. What are you doing? This is not a cash flow. This is just a foreign exchange gain. Perfect. Okay. Sir, no confusion kada. Now coming to the next one. In cash flow statement, present under operating activity like receipts from debtor. How much, sir? $800 multiplied by 68, which comes to rupees 54,400. There ends the matter. You're not going to show any other thing. You are not going to show any other thing. Reason being, you have sold to a customer for $1,000, where still $2,000 is pending. That is not at all your cash. If you hold the $2,000 in your hand, then the $2,000 multiplied by opening rate and closing rate. You will be doing that. Did you get my point? So difference between question number A and question number B. In question number A, you are holding the currency of $1,000 and hence $1,000 multiplied by opening balance, $1,000 multiplied by closing balance, and you are stating that the difference is due to foreign exchange trading. It is not at all a cash flow, which is also called as an unrealized gain. Hey, take care. Unrealized gain. But coming to point number B, I am not holding any foreign currency. I have made a transaction. I sold to somebody else a $1,000. He had paid only $800 when the rate is 68. So my receipt is $800 into 68, 54,400. I'll be booking it in my cash flow statement. Then you may be asking me, sir, we sold it for $1,000. Yes. For 70. Yes. Now you have received only 800 into 68. Then what about this one? Listen very, very carefully, everybody. Sold $1,000 multiplied by 70, which comes to 70,000. Make this dollars into two parts. Number one, receipt. Number two, due. How much is received? $800 multiplied by 68. Show under cash flows from operating activities. You just have to add it there. Sir, then there is loss. Of course, yes, loss is there. How much loss is there, sir? $800 multiplied by, you have recorded it at 70, but now the rate is decreased 68. So automatically there is a loss of rupees 1,600. This will be transferred to P&L account. This will not be presented in cash flow statement, my dear children. Understood? Hey, but if at all you are holding that $800, did you get my point? Opening will be something like $800 into 70. Closing will be something like 800 into 68. To reconcile these two things, you will be telling that there is a foreign exchange loss which is to be transferred to P&L account. Did you understand? If you are holding currency 800 into 70, 800 into 68, difference of 800 and 2 is due to foreign exchange loss, which is not at all a cash flow, which is transferred to P&L account. Like that you have to reconcile, because cash flow statement is a statement which is reconciling the opening balance and closing balance. So opening you're telling 800 into 70, closing you're telling only 800 into 68. So users will be thinking how there is a fall of rupees 1,600. You have to tell them, you all users, no worries. There is no outflow of cash. It is the loss due to the change in foreign currency, which is a loss which will be transferred to P&L account. Like this you have to tell. Clear? If you are holding the currency. But if you are not holding the currency, then only the receipt will be booked in operating activity. Remaining will be transferred to P&L account as loss. Understood? Now due. How much is due, sir? $200 multiplied by, how much is the year ending price, amma? 69, which comes to rupees 13, which will be shown in balance sheet. Initially recorded. Now also for this due there is a loss. How much, sir? $200 multiplied by 70 minus 69, which becomes rupees 200. This also will be transferred to P&L account. No way connected to cash flow statement. Is the total logic clear? Just one simple summary. If you are holding the foreign currency in your hand, you have to reconcile the same. How the opening foreign currency had become closing foreign currency. If it is gain, you will be telling that there is a foreign exchange gain, add it, and it will be transferred to P&L account. If it is a loss, treat it as foreign exchange loss, deduct and transfer it to P&L account. There ends if you are holding foreign currency in your hand. If you are not holding foreign currency in your hand, don't do all the profit and loss adjustments. Check out how much you have received or how much you have paid. Only that will be booked in your cash flow statements. Understood? Pakka? Emana doubt unte adagachu. Meer koncham chala jagrattaga analyze cheste you will be getting. Just after the completion of today's class, you analyze the example and you analyze the solution, whatever you have written, then you will be getting a better understanding. Sir, just to remember it in a quick way, remember, if you hold the currency, reconcile between opening and closing by booking profit or loss. If you have done a transaction, don't reconcile the profit or loss differences. Understood? You will be just booking how much amount is received or how much amount is paid. Clear? That's it. If you want, I'll give even that note also. Note. If a company holds foreign currency, then reconcile opening plus or minus profit or loss. This will be transferred to P&L account. Will be giving you the closing. Hey, respond correct or wrong. Opening plus profit is equal to closing. Opening minus loss is equal to closing. If you hold foreign currency. Point number 1. Point number 2. If a company had done a transaction, then profit or loss on realized part and due part hyphen transfer to Chapali. Whether it is realized part or due part, it will be transferred to P&L account. Clear? In cash flow statement, book only the amount received or paid. Not profit or loss on realized part. You have to book only the amount received. That is realized part. Clear everybody? Understood? You will be booking the realized part here, but profit or loss on realized part will be transferred to P&L account. Take more care.